This is our Forex blog for December 19th, 2012, and this is our new tool which I've been working on and trading with, and I decided to use one of our older names for it, FX Trend Intensity, because that's what this does. It not only shows you, for the most part, a good percentage of currencies trending up or down, but it also measures the intensity on a bar-by-bar basis, and even better than that, it also measures the intensity for that time of the day compared to other times. So during dead times, it uses a lower threshold. During explosive times, it needs to have bigger moves in order to register a strong trend. I also have labeled the 40 level on here and the 80 level. The 40 level trends can continue and often do. 80 level trends are incredibly strong or weak and continue the majority of the time, and oftentimes immediately. You don't have to wait for any kind of a pullback. You can jump on board them. As you can see, the euro was strong for many hours. Some weakness right here, lasted for another half an hour, and then the weakness resumed again. Same thing here. You see that? Same thing with the yen. Extreme strength. The counter trend move wasn't quite as weak. That extreme strength came back and came back and came back. This is a very unique tool, and I'm going to show you how I plan on trading with it, and it's a very easy trading method that people can trade with, and you should have good success with it like I have. The first step is identify the currencies that are super strong versus super weak. Most people trade the dollar, yen, euro, and pound pairs, and so in doing the new blog videos, I'm going to have those ones bigger, and underneath that the Swiss and CAD, Australia and New Zealand. When I scroll one of them back to see what it looks like at that time of day, you can see they all scroll back. So let's say you started trading here at 5 o'clock. You can see the euro is incredibly strong, and without a doubt, it's the strongest of all of them. The Swiss is a slight second at that time. Now, the pound is a quite slight second. The pound has one benefit over the euro, in that the euro had about an hour to 3 hours, close to 2.5, 3 hours of moderate weakness, whereas the pound did not have that and actually had some strength before, and it may resume shortly afterward. But regardless, you can trade the euro versus either the yen, the yen here, or the dollar. So let's bring up the euro chart and showcase what this tool looks like on this chart. You can see this is a 5-minute chart, and I just have it using 5-minute data. In the future, it's going to work on tick charts and range charts as well, but right now it works on the same time frame as the trend intensity is. So you can see this starts to show incredible strength right here at the very beginning of that trend, and it continues. And during these pullback phases, there's not much weakness, and obviously you want to trade where the momentum is. It's to the upside. So during the 4 o'clock until really 8 o'clock time frame, you want to look to buy. So when you use the currency meter, you can see this trend continued, and basically there's a couple entries. Once you find a strong trend like this, you can buy breakouts of rectangle patterns. These are basically low volatility patterns. Markets go from periods of high volatility in trends to periods of chop and low volatility to periods of high volatility, as you can see, to periods of chop, to periods of new trends, to periods of chop. And that's how the markets work. Anytime you see a little rectangle pattern like that, it's a relatively safe time to get into a trend, especially in the direction of the clear momentum. So let's scroll through the day and take a look at what's happening a little bit later. You can see the euro has been strong throughout the day. Here's the first sign at 10 o'clock that there's extreme weakness in the euro. In fact, the euro and the Swiss are pegged together, so they're both super weak together. And you can see the yen, which has been super weak for such a long period of time. Most yen pairs are up hundreds and hundreds of pips. At 10 o'clock, because the euro, yen, and to a lesser extent the pound yen, it's not quite as weak right now against every other currency. But the euro's falling against every other currency for the most part, and doing so incredibly intensely. The euro yen at 10 o'clock is a great one to be looking for sells. And as you can see, as you're scrolling through this, even before that drop, look at what you see. The trend's up. You always want to draw your fibs on the chart. And you can see it's very close to the fib level up here. And I'm using a new drawing tool and recording tool that allows me to mark up the charts and make them more intuitive for people to follow. Anytime the market trends up this way, when you draw your fibs, it's very likely to reverse here. You can clearly see a lot of intensity earlier on, and then it's kind of falling off a cliff. You can very easily visualize that. So when it tried to go up again here and failed, it had even less weakness, or actually has less strength than the previous down move's weakness. This is a very high probability place to get short. And as you can see, started dropping. You know, it actually showed the beginning of the downtrend right here. Look how fast this is at catching the new trends. Now, what if you miss the first move? All right, so at this point, and a lot of times super weak trends or super strong trends don't give you much of a pullback. When you see a currency that's up hundreds and hundreds of pips, 5, 6, I'm not sure, maybe even 7 days straight, when you get this kind of intensity, you know, the trend could be over and it might have 2-3 day pullback. So this is pretty early into a new trend to get short, given the fact that it's been up so much. So it's always important to look at the longer term charts when you're trading. But as you can see, if this breaks the 112 level, it's very likely, because it is up too much and extremely huge amount over the last 2 weeks, it's very likely to go to 77 or 65 and even lower without any kind of a pullback. And watch, as you got in this, it spiked. This is a trend that's very likely to continue. It does. It's even weaker. You know, you might want to exit half your trade here. You made 25 pips on the first half, put your stop above that bar's high. And it's so weak it's not really even coming back. It might just pull back 10-15 pips and then continue on down. So now you have a nice little sideways rectangle pattern here. And so when it breaks down through there, it's a nice place to go short. Alright, so it didn't break down there, but you do have a nice pullback. So this is a pretty decent place to go short with your stop right above the high. Notice the pullback had almost no strength in comparison to the previous weakness. So you're short, you're watching this like a hawk, you want to see incredible weakness come back in. If it doesn't, you get out. You know, you're already up about 7 or 8 pips. You might want to get out of the trade here. You can always get back in. There's not that much weakness. It might go back up a little higher before this extreme weakness resumes. Notice there's even less strength now than before. That's excellent. Sell when it goes maybe below this bar or the previous bar's low. Alright, so you're short somewhere, let's say at 77 here. And notice the spike here, incredible weakness. That means the majority of euro pairs are falling, yen pairs are getting strong, and they're doing so for incredible intensity at this time of the day. This is what is so amazing about this new tool. That's why I wanted to call it FX Trend Intensity, which is a tool we used to offer, and we created 5-6 years ago, and I discontinued it about a year and a half ago, because we had so many tools I don't want to confuse new traders. But this name is excellent. So this is a completely different mathematical formula, but I like the name. And you can see when it's showing incredible weakness here, that trend's very likely to continue. Alright, it's losing its momentum here. You can get out of half your trade and lock in 7 or 8 pips, or you can, you know, move your stop to break even if you believe the trade's going to work. Alright, I typically get out of half and let my trailing stop out of the second half. Alright, notice this bar here slowing down. It goes below that low. Because of the previous weakness, you can go short again. Alright, it never did, so you're not in it yet. All right, I might sell the low of this bar, or maybe if you want to be a little safer, let 111.80. All right, short right here. Finally run it red. All right, out with a small loss. Wait for it to break that 80 level there. All right, you short again. You want to see the next bar spike weaker, or else the trade's less likely to work. You know, so you can get out of the trade with 3 or 4 pip loss most of the time without taking any kind of a big loss. All right, short again. All right, I'd be getting out of this near break even here. Whole key to trading is small losses, big wins. And you know, at this point, the market pulled back a little bit. It's not able to go higher. I'd wait for it to break this low here to go short, because it is in a very low volatility period again. And again, keep in mind the time of the day too. It's pretty dead most days during this time. I just noticed that now, so most of us would not even be taking these trades because of it. But you can see that trend did continue, which oftentimes does happen. And you got another huge move, 111.75 all the way down to 110.81. I mean, this is an astronomically huge move that was predicted, you know, early on. And you caught that move, you got that move, you got that move. You might have gotten checked out of a few, or you could have actually gotten short and put your stop right above the high, had a little wider stop, and you know, been in that for the big move and not had a single loss. So as we look at this, let's look at some other opportunities here. Pound. Anytime you see quite a few hours of weakness and nothing hitting the 80 level, it's not that kind of an intense downtrend. Now you have quite a bit of strength here at 3. It's not the kind that's almost guaranteed to continue, but it is a stronger up move than what we've had below. What's one of the weaker ones? Well, the Australian and New Zealand are both weak. The New Zealand had less strength than the Australian did, so I'd take a look at buying the pound New Zealand here at 4 o'clock and looking for trades in the pound New Zealand. So here's 4 o'clock. Guess what? There's a little bit of a pullback. There's almost no weakness in that pullback, and when it breaks out of this nice little descending pennant flag pattern, look at what happens here. It goes from 9,400 to 94.78. Almost an 80 pip move predicted about an hour before the real second move happened. And you can see by looking at this chart, you know, by drawing your trend lines and looking at the levels, this thing trended down with a lot of weakness right here. Previous move up was quite strong, pulled back. The weakness is getting less and less. It's for the most part green right here and breaks out of that pattern. If you were watching this individual chart by itself, you might have got into the first move, the second move, and also the third move, although it's starting to show a little bit of weakness here. Anytime you see a big move followed by almost no weakness, it's a super high probability trade. So this tool is going to be probably released on Friday. It's called FX Trend Intensity, and we also are going to be creating colored candle bars, which you might want to use a currency meter, longer time frame trends, 5 minute, 10 minute, 15, 30, and then use a 2 minute or 5 minute colored bars on the chart to just time your entries. You know, this is pretty much the most easy to trade system we've ever come up with in the last 9 years.